Good morning and happy Friday to you. You're tuned in to Trade Talk on BQ Prime. My name is Alex Matthew, and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Well, we've had the August expiry, and we're set up for the new series. And there's quite a bit to take away from even yesterday's session. It was chop and churn, but once again, you saw the broader markets blitz past. So you saw a decline on the benchmark, but you saw the small cap index gain as much as 1%.
Absolutely. And it's interesting to see how markets ended because Nifty almost a 94 points cut is what we saw. We ended at those 19,250 levels. Bank Nifty also ended lower in yesterday's session. And as Alex was mentioning, a positive move in terms of the mid cap as well as the small cap index. If you talk about sectors, it's real estate as well as IT. These were the two major ones that actually ended in the positive in yesterday's session. Now, if you talk about the new series, what the August rollover data is indicating is that there is lack of optimism that is being carried forwarded in terms of where the long positions go in terms of the September series. In the August series itself, you had Nifty, which ended with cuts of almost a little over 2%. Nifty has been consolidating in that 19,260 to 19,460 kind of a range, and this has been happening in the last 13 trading sessions. Now, if you talk about the FIs as well, they have been selling, and their selling is something which is actually keeping the Bank Nifty also pretty much subdued. If you see Bank Nifty, that has taken a cut of almost 3.7% in the August series. Now, moving from Nifty as well as Bank Nifty, if you see in terms of the WIX, which is the sentiment indicator, that has actually given a major discomfort to the bulls in trade today. Because if you see the WIX in the August series itself, it's risen by almost 14.75%. So the levels are from 10.51 to almost a 12.06. So this is one of the factors which is really not letting the bulls get into that buying mode, and it's getting the bears absolutely active in the markets. In terms of sectors that actually gave a negative return this expiry, you had banking and finance, energy, as well as the consumer staples, whereas on the positive end, you had sectors like industrials as well as consumer discretionary. Both of them actually were up in that range of 5 to 7%. From a sectoral open interest change perspective, you had banks which gained the maximum OI this expiry, which was little over 18.5%. Whereas you have information technology, which actually saw, the biggest decrease in terms of open interest, that was to the tune of little over 15% as well. Now, moving on to September series, if you see where the maximum OI addition is happening, 19,000 put strike as the highest OI, whereas on the call side, you have 20,000, which has the highest OI. So again, a broad range of 1,000 points is what we are watching out for, at least from the beginning of the series for the month of September, Alex.
And so that's very interesting. But if you look at the Nifty 50, of course, we broke past that 19,300 mark on the downside in yesterday's session, but we've hovered around that mark for quite a while.
So 13 sessions, right?
Yeah.
Where we are in that 19,260 to 19,460 kind of a range.
So we'll have to see whether there's any major decisive breakout on either end, and whether or not this dichotomy, if you can call it that, will continue, because small caps have just been raging forward. There's a lot of interest domestically as well, with a lot of money pumping into mid cap as well as small cap funds. So there's a lot of interest, buying interest, whether or not that liquidity holds out, and if there's something to give.
And with that, the other aspect is from the FI perspective. If you see the FI long short positions as well, in the month of September, getting into the September series as well, their long positions are still higher than the short positions, right? So there is that positive momentum, but that's happening mainly in the broader markets, not much in the large cap benchmark indices kind of a space.
So we'll have to see whether mean reversion trade kind of takes place. I believe we've got our first guest for today joined in, and we wanted to have a conversation about crude oil, because crude oil has moved up quite significantly over the past week or so, from below $84 to the barrel. I'm talking about Brent crude, all the way up to $87 to the barrel as I checked last. Some of that has to do with the inventories in the US, some concerns over supply with Hurricane Idalia. We've got Jonathan Barratt to give us some perspective. Jonathan Barratt, CIO of CelsiusPro, joining in. Jonathan, thanks so much for taking the time, and good morning from India. What can you tell us about the context right now? Why is crude going up?
Good morning. Look, I think there are a couple of things, and obviously the concerns that we have, in terms of any hurricane anywhere around the Gulf or in Florida, that'll also heighten little people's expectations of supply issues. We've got issues, obviously, in with OPEC and Russia. They're continuing to sort of hint to the market that they're going to continue to have those supply cuts, and I think that's sort of forcing people's hands. Against that, we've obviously got issues in China, and when we see the economics starting to slow down there, then people are sort of saying, well, okay, is oil going to continue to trade up from here? And I think these are the balancing items that we've got to contend with in the oil market at the moment.
Good morning, Jonathan. My question coming to you is overall, we've understood the reasons which are causing crude to actually inch higher. But from here on, where do you see it getting capped? Because it's on the upside from, somewhere below $80 a barrel. We're already at $87. We're not too far away from 90 also. Where do you see it moving to?
Look, I really don't. I don't see it really extending itself from too much from here. 87 is critical resistance, and we understand that. But when you look at the current macros we're dealing with, I certainly think the weight of economic performance is the one that's sort of going to stop it from rising too much further from here. Let's see what happens in the States tonight. We've got some pretty incredible or pretty important data by way of employment. That'll give us a guide as to where the economy, particularly in the US, is actually going. We've had some weak numbers out of China. Weak manufacturing data. So when you get a sense of this, interest rates have moved higher. The economies are all starting to slow down. As a result of that, we really can't see that demand, unless it's supply driven, push prices too much higher from here.
Two factors that I want to get your view on. One is what the OPEC does in terms of controlling supply, and also the implications of the winter period and any measures that China manages to put through very quickly to bolster the economy there. So one is obviously the supply side, and the other is the demand. So how do you see these two elements moving?
Look, I think OPEC Plus and Russia, I think that's a very important thing, and they've controlled it, and they've also said that when it comes to supply cuts, they're looking to rebalance the market, and they will always be there sort of tweaking it. And to me, that is something that I think the market will obviously always focus on, because that's what caused it to move up over the last sort of 2 to 3 months. Now, when you look at China and you look at China's stimulus policies, the market has really been focused that they will give us a big push. If you remember back in 2007, when we had that global contagion, China put together a $560 billion stimulus package, and that was the first economy to come out of that malaise. Now, the market is suggesting and thinking that they'll put some form of stimulus together at a similar magnitude to get that economy kick-started due to the property problems. As a result of that, we haven't seen it yet. They've still got room to move, but we haven't seen it yet. And as a result of that, I think that is also supporting the market. But up until we get them to do something, I think the market will always be on the edge saying, well, China's got that ability to put some stimulus in, and she will. So let's just wait. In the meantime, that's going to create demand. But is it just a hollow argument?
Right, so the demand and supply is going to be absolutely crucial to understand where crude moves from here on. Thank you, Jonathan, so much for joining us on the show and sharing those views. So clearly, in the last 2 months, Alex, if you go to see, crude has just moved up 20%. We've not even realized how slowly, steadily, but 20% is a big move in terms of crude prices. But where from here on, as Jonathan was mentioning, there is not much room to go beyond the 87. At the max, I'm assuming 90, 92 is what they could be expecting. But beyond that, where it stabilizes and normalizes is going to be interesting, because it is election year as well, right? So ahead of that, there'll be a lot of pressure that could be coming in terms of oil marketing companies to reduce prices or keep them stable. So a hit in terms of marketing margins is something we need to watch out for from an OMC perspective, because all of those stocks have been trading under pressure lately, and HPCL, IOC, as well as the BPCL.
And in fact, we did see the announcement on gas cylinders not too long back. Petrol prices at the pump here in Mumbai have been stuck at 106 rupees to the liter for quite a while. And we'll have to see whether that pans out. And I guess also the reason why we've not really noticed crude inch higher is that when you saw news coming from China about the potential decline in growth or the slowdown in growth there, you saw crude fall once again. So it has, if you look at
it's been a volatile
it has
ride,
been, yeah.
but that I was just looking at a chart. Last 2 months, 20% is a good move,
Yeah.
and I think it did warrant a discussion as well. So it's going to be interesting
Certainly.
to see, and its impact on inflation going ahead in the coming months is going to be critical. In fact, let's head across to Pallavi as well to get us more in terms of the macro data that has come in the form of GDP last evening. A one-year high. What is the number indicating, Pallavi, and what does it tell you?
Hi, Hiran. So GDP growth has indeed come in at a 4-quarter high of 7.8% for the April-June quarter. 7.8% is in line with expectations. That's also how much GVA has grown by. Now, once you look at the industry-wise trends, along expected lines, services continue to remain the largest driver of growth, whereas on expenditure, private consumption as well as investments were strong. Government expenditure, however, was actually in the negative. What's interesting, however, is that this, apart from being the highest print in 4 quarters, is also very likely going to be the highest print in the current fiscal year. What that means is that here on, we do expect GDP growth to ease going forward. Now, that's because of a combination of reasons: tighter monetary conditions, tighter financial conditions, high inflation, all of these factors likely to impact private demand a little bit going forward. And of course, yesterday the IMD in its press conference also said that August 2023 was the driest on record. What that means is that the southwest monsoon's trajectory remains to be seen in September, while the IMD forecasts the monsoons in September to be normal. It's still likely that for the full season, southwest monsoons will be a tad bit below normal. So how that impacts the Indian economy, what the impact of that on inflation, on rural demand, on rural incomes is going to be, remains to be seen.
Very important points there, Pallavi. Thanks so much for joining in. In fact, I did speak to the Director General of the IMD yesterday, and what he was saying, very interesting points being raised, is that the spatial distribution from this point is a lot of the northeast region is going to receive a lot of rains right now. The northwest region is going to be a little bit iffy, and that is the very crucial Punjab and Haryana region, which, as you know, is the grain basket of India. But interesting point that he made in that conversation is that the reservoir levels, on account of the rain that you received in July, is quite good. Irrigation is very well entrenched in that region, so perhaps the concern is not very high. And overall, you might see a few regions that receive deficient rainfall, but that's in the central part of the peninsula. If you want to catch that whole interview, I'd suggest you check it out on one of our social media platforms. I believe we have to check on the auto sales data because, as you know, the first and the second of the month is when a lot of these auto companies release their volume data for the previous month. We've got Vinay joining in to give us some perspective on what is expected. Vinay, what are you picking up?
Thanks, Alex. So the flavor of the season is all about the festivals. And because festivals make up a large chunk of companies' annual sales, they are pushing the inventory on the dealership side. And that is going to lift the sales across segments in the month of August. And within the segments, if we see in the passenger vehicle segment, the huge pending order books and improving deliveries due to the improving situation on the semiconductor side has also pushed the deliveries up to the dealerships, and that is pushing up the inventory level at the dealerships. So that is improving the sales of the passenger vehicle companies. Within the two-wheeler segment, we are seeing a bit of recovery on the retail sides for the two-wheeler companies. But exports may continue to disappoint as exports are overseas markets continue to lag behind the domestic one. So within that segment, that means that if exports disappoint, TVS and Bajaj Auto will be under some pressure, but Hero MotoCorp and Royal Enfield will do better than the other two. So, and Royal Enfield will be in spotlight as they are going to launch their Bullet 350 today, and that is going to be their strike back after Harley Davidson and Triumph launched their models within the segment. Commercial vehicle sales are likely to pick up again after a brief period of slower growth because of the monsoons, and the festivals are impacting sales there as well. And tractor makers may also see growth aided by higher rural incomes due to crop realizations. And as you said, that the reservoir levels are holding up, and that is helping them in realization of crops income, and that income is going to put the tractor makers also.
Right. Thanks, Vinay, for getting us the details as well. And as Vinay was mentioning, clearly the anticipation, what analysts are talking about is that the car dealership inventory levels are expected to be at a 4-year high as well, because the festive season is expected to be strong this time around. So it's going to be really interesting to see how all of these auto majors actually pan out in trade. And a Royal Enfield, along with a Hero Motor and Bajaj Auto, will be in focus today on the back of the launch that Vinay was mentioning with regards to the Royal Enfield. So interesting times for the two-wheeler space as well. But moving on, you have Geo Financial Services. In fact, that has been in the limelight over the last couple of trading sessions with the kind of moves and the kind of bulk and block deals that are happening on the stock. From today, I assume it gets delisted. I beg your pardon, it's the wrong word to use. It's out of the indices from today's session, only from BSE, right?
Yeah.
Rishi standing with more. Rishi, if you could help us understand how does it function on BSE as well as NSE?
So, as I said, it will be excluded from the BSE indices from today. And now the impact for this exclusion will mostly be fed by those passive funds who are tracking BSE indices like the Sensex, because they'll be required to sell the JFS shares in order to be accurately tracking the indices. Now, according to a Nuama analyst estimate, this would be about 6 crore shares that passive funds will be required to sell, and I believe some of this selling has been taking place, but the level to which they have whether or not they have completed this selling is not yet known. But as it was mentioned earlier as well, please note that today's exclusion will only from BSE indices and not NSE. This is because for NSE, the criteria for exclusion of JFS from the indices was that it should not close at either the upper or the lower circuit for 2 consecutive days. As compared to BSE's criteria, which was it should just not hit the lower circuit, and it hasn't been hitting the lower circuit this week for the past 3 days. So that's why it's been excluded from the BSE. But if you look at the share price, it closed about 5.3% higher yesterday, and it closed at 5% day before. So because it closed at only 4.3%, and if it doesn't close at either the upper or the lower circuit mark, there's a good chance that it may be excluded from NSE indices on Monday. But however, given that it is being excluded from BSE today, if there's some selling pressure and it maybe closes at the lower circuit, it may not, the exclusion from NSE indices may be further
Not
delayed.
happen on Monday as well.
All right, so that's certainly one to watch. It has been a little choppy over the past couple of weeks, and particularly over this past week as well. Thanks, Rishi, for bringing us those updates. JFS one to watch. We've got several more stocks that we're focusing on, and the list is quite long. We've got Saloni joining in first to give you her list of stocks. Morning, Saloni. What's on your list today?
Morning. So first we've got Network 18 Media and Investments, which is owned by Reliance Industries. So the company acquired media rights for the BCCI international and domestic matches starting from September of this year to March 2028. The rights were acquired for almost 6,000 crores. So Ernst & Young were the strategic advisor for the BCCI media rights, and Argus Partners were the legal advisor to assist in drafting the tender documents. Next, we've got Aditya Birla Fashion. So according to a PTI report, the company plans to raise 750 crores on or after September 4 through debt bonds. Aditya Birla Fashion proposes to raise these funds by issuing 75,000 non-convertible debentures at a face value of 1 lakh each on a private placement basis. In other news, the company also completed the acquisition of 29% stake in TCNS Clothing that is estimated to be over rupees 941 crore. Also, the company had earlier acquired 51% stake in the same company for about 1,650 crores. Third, we have Nykaa that invested 3.97 crores in its international arm, that is FSN International, by acquiring 39.8 lakh odd shares at rupees 10 each on a rights basis. Then there is Jet Airways. So the SBI-led lenders to Jet Airways received 100 crores from Jalan Kalrock Consortium So the lenders received the 100 crores out of the 350 crores that is to be paid to them. The consortium's current investment stands at rupees 250 crores in the company, and they are to pay an additional 100 crores by the 30th of September. And lastly, we have news on the BSE buyback. So the board approved the buyback of 46 odd lakh shares at a price of rupees 816 per share. That aggregates to rupees 374 odd crores. However, in the past month, the stock has surged about 26% and it closed at rupees 1064 yesterday, which is a 30% premium to the buyback price.
Right. So lots to watch out for, specifically from a BSE perspective. The way the stock has moved in the last 1 month has been spectacular. In fact, the current market price is higher than the buyback price. So it's going to be interesting to see how the buyback pans out, because usually you have companies which do a buyback to support, and that comes in as a support to the share price as well. So it's going to be interesting to watch out for in terms of BSE, as well as if you see the options data. I was just reading one of the reports yesterday which indicated that the BSE options data, the volumes have reached almost 10% of the overall options volumes from the market. So that's interesting as well, and that's something which is coming in as a support as well, why we've seen a rise in terms of the BSE stock price. Thanks, Aloni, for getting us all the details. But moving on, a lot of other companies, Alex, where you've seen order wins that have come in, a couple of fundraising plans that are on the anvil as well. We have Varsha who's standing by to get us more details on that. Varsha, what do you have for us?
Yeah, so few stocks that one should watch out. So we have got various order wins. So the first is Genius Power Infrastructure. Now, company has bagged 2,247 crore order for 24.18 lakh smart meters. Now, total order book now stands at around 11,000 crore. Then we have ITD Cementation, which bagged marine contract worth rupees 3,290 crores, which is excluding GST. Then we have Shakti Pumps. Now, a company has received an order from Haryana Renewable Energy Department for solar water pumping systems. Now, this order will be executed within 120 days. Then we have India Pesticides, which acquired 11,461 square meter of land in UP. Now, this is to set up pesticide manufacturing unit. The cost of acquisition for this plant is almost for this land is 9 crore. Now, the Balaji Amines has come up with his Q1 June 2023 earnings. So the revenue was down 30%, while the EBITDA was down 54%. Now, margins were at 21% versus 32%. Now, if you see margins last year was 32%, these were not sustainable as guided by the management. Now, volume growth for FY24 is expected to be 10%, but one should consider that FY24 can be a muted growth, a muted year, because the company is doing heavy capex. So FY25 and 26, company will see good growth due to capacity expansion. And yeah, so these are the growth prospects that company is looking out. Now, as you said about the fundraising, so two companies have come up with a fundraising. So Gufic Biosciences and Ethos. Now, board will consider this fundraising on the coming board meeting. For Gufic Biosciences, we have board meeting on 5th of September, while Ethos has 1st September as board meeting.
That's today. All right. So those two should be watched out for. Thanks so much, Varsha, for getting us those updates. The last month or two have been peppered by a lot of bulk and block deals, very large trades taking place. And yesterday was no different. We saw quite a few big deals take place. Sula, for example, closed 4% lower after quite a large trade. And we've got Mihika joining in to give you some details, because some of those details have emerged. What are you picking up, Mihika?
Yeah, so Baldi's worth a total of 3,442 in the big deals were executed yesterday. Yes. So first we have Sula Wines that had Baldi's around 801 crores taking place. One Invest Asia sold around 1.06 crore shares, which represents 12.6% shareholding on the company at 484.13% of piece. HDFC Mutual Fund bought 4.2% shareholding, and Morgan Stanley Asia bought 1.6%. Others buyer included Society Generale and Gisalo Master Fund. All buyers bought their stake at a 484 per share price. Next, we have Prudent Corporate Advisory. TAFDI investors sold 9% of their stake in the company, and a total of 37.37 lakh shares were sold at a price of 1,125.07 per share. Mansi Share and Stock Advisors also saw 0.8% stake in the company at a price of 1,096.02 rupees. The buyers included DSP, Mutual India, Akron, ICAV, and Abu Dhabi Investment, who bought their stakes for a price of 1,125 rupees. Next, we have MedPlus Health Services. Both Lavender Rose Investment and PI Opportunity Fund sold 5.9% stake each at a price of 861.68 and rupees 861.93 respectively. Nippon India Mutual Fund, Sterview Capital Mauritius, and the government of Singapore were among buyers that bought the shareholding at a price of 862 rupees, and while Fidelity Fund bought it at 856.79. And lastly, we have Kesoram Industries. Eastern Industries sold 25.2 lakh shares, which represents 0.8% stake in the company at a price of 89.69 apiece. And then we have Orient Green Power. LIC sold 2% stake in the company, which is a total of 47 odd shares, and they were sold at 2.78 apiece.
Right, so lots to watch out for in terms of what's happened. But another one, thank you, Mika, for getting us the details. Alex, one more stock we should be watching out for today is Yatharth. And today is the lock-in that ends, right? And I think a lock-in ends for around 4%, if I'm not mistaken. That's the odd number that we should be watching out for. So don't be surprised if you do see selling, in terms of Yatharth as well in trade today.
And that brings us to the end of this edition of Trade Talk. We've covered quite a bit of ground, but there's lots lined up over the course of the day. It promises to be quite the interesting start to the new series. Do stay tuned. All of that coming up on BQ Prime.